Another company out with numbers today is Invicta, which reported a 15% rise in its interim results, despite operating in a market characterized by labour unrest. Arnold Goldstone, Chief Executive of Invicta, joins us now to unpack the numbers. Arnold, as we heard there, it seems as though you're doing something fairly right. Revenue up by 46%, operating profit also up by more than 50%. Despite the labour unrest, what are you doing right?
Well, I think we have a magnificent team. A good business relies on a team. There's no point in having 10 wings on the field. You need a wing, you need a centre, you need a fullback. And I think that's been the success of our business. Also, we have a mixed bag of businesses. We have capital equipment, we have Berryman Group, we have now our growing building materials business. So when one rises, the other one might decline, but a nice sort of mix of businesses. But essentially people, that's what businesses revolve around.
It's a long time since I've heard people complaining in the commentary to the results about tough conditions, and then in that area, which is for you the industrial consumables, up 20%.
Yes, well.
So how tough does it have to get you guys go back?
Good question. Normally our results are slightly better, and I think that reflects in a 15% rise in earnings per share. Our kind of history has been, in fact, our rise in our earnings per share over the past 12 years compounded has been of the order of 30%. So for us, this has been a tough year, but nevertheless, we've produced what we thought are really good results, given the circumstances.
You put a lot of money in here. Christo Visa, we were talking off camera, has been an investor for quite some time, but
yes.
It's interesting to look that in December last year, management team got together and bought 70 million rands worth of shares, weren't given, and Christo put another 80 million rand in. Is that the approach, that you take money out your own pocket?
Absolutely. We like people to have skin in the game, and you'll see with all our acquisitions, for example, especially when we go into higher risk areas, take Kian An Engineering in Singapore, we would never go there on our own. So we have 25% of the shares being owned by management. Skin in the game, real money, not money lent by us. They have to go to the banks and borrow. And in the Invicta executives instance, exactly the same. Much more focus from your men that have got their houses on the line.
You opened up Singapore. We were talking about this earlier, and I don't know too many South African businesses. Data had Datacraft some years ago, but who've got in Southeast Asia and are seeing these kind of returns from their investments.
Well, we set our goals about 3 years ago to start looking abroad for something that suits us. Too many South African companies had burnt their fingers abroad, so we had to be really careful. We targeted one or two, one didn't work, and Kian An was the one that did work for us. If you walk into the Kian An business, it feels as though you're walking into our South African businesses. Same look and feel. We are essentially a blue-collar business in a very technical world, and it felt comfortable for us to walk into their business. The people have the same approach as we do, so we immediately felt comfortable with that. Secondly, Singapore is quite a soft landing in Asia. To go into Japan or China to do business is tough. So Singapore has a history of an English heritage. So the law is largely based on English company law. Most people speak English. In fact, English is the first language. So it is a comfortable space for us to operate. And what we liked about the business, it had been founded in 1965 by people that were still running the business. So one of those has exited. The remaining team stays on, so it's great for us. Nice business, long track record, know their product, fits with our sort of DNA, if you want. Very, very nice.
Are you looking for another comfortable company
Absolutely.
To purchase in the
always looking. Hence the change in our management team. What we have done is we've said, look, we've grown tremendously over the past probably 2 to 3 years. But if you go back in our history, as I've said, the growth record has been there. But we are very aware of the fact that we may be too thin on the ground as far as senior management is concerned. So what we've done is we said, okay, let's not change the team, let's change the roles. So I'm going to become executive deputy chairman. Charles Walters, who heads up our BMG division, he's the CEO, he's going to be deputy to me as CEO until such time as we find a replacement for him. And then he will step into the role full time, and I'll assume deputy chairmanship in an executive role.
Doing what?
I'm going to look more at strategy. And the advantage of me being around is that I know our businesses so well. So I'll be able to help Charles, be able to help the new guy that comes in to replace him, and also our capital equipment business run by Tony Sinclair, a very, very capable team.
Usually when guys get put into the office to go and do strategy, it has a different connotation.
Well, in our
Have you engineered this?
I have. Of course, I'm an engineer. So yes, we wanted to make sure the same players are on board because we don't want our major shareholders to feel uncomfortable. I am myself a big shareholder, as is the management team. So we want to make sure that there's a gentle transition, no shocks to the system, and as the picture unfolds, so we'll adapt accordingly.
Because you did have a shock when Greg Till passed on.
That's right.
Years
Yes.
ago.
Yes, yes. He was ill. He was ill for a few years, and in that instance, we were able to manage the situation, but we had to go into a holding pattern in the BMG business because there was no certainty as to what the outcome of his health would be. And as it happened, it took a year with him not being at the helm for us to realize, and him to realize, that we needed to make some changes. So, one doesn't want to introduce shock changes unless it's necessary. If you lose an executive or team unexpectedly, obviously, then you're forced into that situation. But where you can manage it, so much the better, I think.
So key lessons learned there.
We hope so, yes, yes. Our intention really in this is to say to ourselves and to our shareholders, we want to have safe acquisitions, safe operations, and safe hands. That's really what it is about, isn't it? To grow the business.
It takes a long time finding those acquisitions, finding the right ones. Are you now, given the success you've had in Southeast Asia, is that where you're going to play more?
We'll look in that area and in emerging markets. So not restricting ourselves only to Southeast Asia, any of the emerging markets. And for that, we need time. As I said earlier, we didn't want to have our executive team too thinly spread. So this is really the intention, is to free up people to be able to spend a week on the ground in whichever country, to go and sniff out the businesses, to get to feel them, because to make the wrong acquisition sets you back enormously. So we'd rather make sure that we maybe a little bit have too much capacity than too little.